Welcome back to the program. Our analysis of the First National Bank of Botswana's half-year financial results continues now with the bank's numbers man, Chief Financial Officer, Dr. Mbako. Doctor, thank you so much for coming on First Issues and affording us your time. We're here to review the half-year financial results for the bank for the period ended 31 December 2024. And stellar results as ever. I mean, 1 billion pula is a lot. And the talk has always been that the bank is making money from exuberant charges to customers. And at your presentation, you were very adamant that that is not what is driving the bank's growth. So at this point, please unpack exactly what is driving the bank's unprecedented growth.
All right, thank you so much. Yes, I think we delivered a solid set of results, and as you say, really is not really out of any exorbitant charges. And as I articulated this morning, when you look at our income, it grew 11%. And you want to sort of look at the two components of our income. You want to look at our transact income, our non-lending business. In the last 6 months, in the 6 months under review, we actually didn't adjust any prices. So all prices were flat. But when you really look at what is driving growth in our non-lending business is sheer volumes. We are doing more with our customers. We are doing more for our customers. Our customer base is also growing. So as you have seen, our customer base grew 8%. The number of accounts also followed the same trend. There was a decent growth on the number of accounts that we have. When you then look at the back of that growth, you look at the number of transactions, they're up 27%. You look at some of our key product lines like e-wallet, it was up 23%. You look at our merchant services, the volumes were up 27%. So you put all these things together, you actually notice that our non-lending business is really driven by underlying volumes where customers choose to do more with us. That's basically where the growth is coming from. The same applies to our lending business. When you look at our three businesses together, you will notice that the volumes, like the advances to customers in retail, we registered an 8% growth. We also have a decent growth of 13% on the commercial book and another 18% on the RMB book. So there is really no price play in all this. I think we all know that on the lending side, the policy rate actually went down. So most of this is just customers doing more and more with us.
Let us talk more around the improvement that the bank continues to see, and that also translates in the non-performing loans. The bank has seen a decline in that. So perhaps you could talk to the caveat, if you will, that led to this improvement.
The biggest story around our NPL is really on three things. The first one is collections. We have had a good run on our collection story. We have incepted this concept we call real help, where we actually put humanity in front of everything that we do with our distressed customers. We put a human face to how we approach collections, and I think that's also that's really a big contributor to our NPL. We've also improved the discipline around our write-offs. Obviously, that also contributes to the improvement of our NPLs. But I think above all this thing, our credit discipline continue to be one of those things that we really look at with a very, very close eye. I think whatever we do, we have got the credit appetite that we continuously look vis-a-vis what's happening in the economy, what's happening to our clients and all those kind of things. Put together, it's what then contribute to the improvement in the NPLs that we report. Yeah.
So in the end, where are we looking to for the future for the bank? Earlier at your presentation, you were talking about how the next 6 months are going to be a bit difficult. So let us talk about the future now.
Yes, the immediate future obviously will also be dependent on the outcome of the economy itself. It's not a secret that currently there's a liquidity squeeze that we sort of observe in the market as banks. All banks, I want to believe, are affected, including ourselves. So we obviously are going to be navigating this path, very carefully, and even our credit appetite will also be informed by the development in the liquidity situation. But that's just very in the short term. But I think in the long term, we still remain very optimistic. We do plan for sustainable growth, and that growth will come from all the businesses that we run. And the corporate side, we've always said that our approach really is to focus on the key sectors of the economy. And I did present some significant numbers that we have put in these sectors, sectors like agriculture, mining, sectors like tourism. I've also mentioned some figures like we have, some business that we have sort of channeled towards the whole transition to green economy. I think as at now we have, channeled $500 million into that particular transition journey. It's an area that we'll continue to focus on. Obviously, our retail business will continuously focus on doing things differently, but all of it will come from looking at the client, hearing the client, and giving the client the experience that they really require of us. What is clear is that we won't be doing the same things that we have been doing in the past for us to grow the bank. All in all, we do believe that we should be able to continue posting good returns for investors. We should be able to continue giving customers the experience that they really deserve. And we, most importantly, our shared prosperity ethos will continue to guide what we intend to do as a bank. So we'll always have partnering with our communities and our stakeholders at the heart of what we do.